ARK Invest just dumped over $3 million of Shopify stock. That's one of their biggest single stock cuts in weeks.
Right.
But here's what's even more interesting. That money didn't just sit in cash.
No, it didn't.
It quietly moved into two fintech names almost no one's talking about, at least not here in the U.S.
And that's the critical pivot, isn't it? That's what we need to explore in this deep dive.
Exactly.
We're not looking at, simple portfolio trimming here. This feels like a significant strategic rotation.
Okay.
So we're analyzing the profiles of these three companies, Shopify, KLARNA, and LY Corp, to really understand the underlying thematic shift.
What's the story it tells?
Yeah, what does this movement tell you, the listener, about where conviction is truly heading in the digital economy?
Okay, let's unpack the exit first then. Shopify, ticker SHAOP.
For years, this has been, well, the darling of the modern commerce movement, hasn't it?
Absolutely. It's basically the essential internet plumbing that lets merchants globally, Canada, US, Europe, Asia Pacific, wherever, start, scale, and run their businesses. A core ARK position for a long, long time.
And it's been a monstrously successful position, which honestly is probably why it's being sold now.
Oh, okay.
I mean, if we look at the performance context, Shopify delivered a remarkable, 90.81% return over the past year alone.
Incredible.
And over 500% over the last 5 years. It's been a massive, massive win.
Hard to argue with that.
But when you've had that kind of explosive growth, you inevitably face the valuation reality check.
Right. And what does that reality check look like for Shopify right now?
Well, right now, the market is pricing Shopify for, frankly, perfection. Its PE ratio sits way up there at 87.62.
Wow.
And maybe more telling for a growth company like this, its price-to-sales ratio is 20.5 times.
20 times sales.
Yeah. If you're paying 20 times annual sales, you're basically assuming they'll maintain incredible, almost unbelievable growth for years and years without any major stumbles or competition.
So essentially, the market's saying, okay, the next 5 years of amazing growth already baked into the price.
That's pretty much it. And the analysts, well, they largely agree. The consensus price target is hovering around $160.
Which is barely above where it's trading now, about $158.
Wait, exactly. So very limited near-term upside suggested by the consensus. You have to ask, why keep highly volatile capital parked in a stock with maybe limited headroom in the near term?
Makes sense. And beyond just the valuation, wasn't there another signal, something about insiders?
Yes, good point. The sources we looked at clearly noted significant insider selling over the past 3 months.
When was that?
September, August, and July of 2025, so pretty recent.
Yeah.
And when the people closest to the company, the insiders, are reducing their holdings, well, it's often a strong hint that they feel the easy gains might be behind them.
A signal institutions watch closely.
Absolutely. When institutions are selling a high-conviction name like this, they often follow that kind of trend. It suggests it might be time to shift capital into less mature areas where the risk-reward profile maybe offers higher potential returns.
Okay, let's connect the dots then. They're selling a high-growth, high PE, established North American e-commerce name. Maybe because the upside looks limited now.
Yep.
So if you leave a U.S. e-commerce giant like that, you need something equally ambitious, right? Where did they land?
Straight into payments and financial technology, Fintech. Specifically, two very distinct names, KLARNA and LY Corp.
Interesting.
This isn't about where people shop anymore, it seems. It's about how they pay. ARK looks like it's placing its chips directly on the global transaction layer.
Let's take KLARNA first, ticker KLAR. This feels like a strategic dive into that, well, very volatile, high-growth area of digital payments, specifically buy now, pay later, right? BNPL.
That's right. KLARNA, based in the UK, is an e-commerce payment solutions company. It connects the whole ecosystem, payment providers, banks, card networks, to the merchants.
Owning the checkout.
Essentially trying to own the checkout experience, yeah. Totally.
But they only IPO'd very recently, didn't they? NYSE in September 2025. So super new to the U.S. market.
Brand new, yeah.
And the sources mentioned its beta is high, 1.72, and it took a big hit just before this rotation happened. That sounds like a high-risk gamble right off the bat.
Oh, it absolutely is. High risk written all over it. And if you peek at the fundamental metrics, that risk profile just jumps out at you.
How so?
Market cap's around $12 billion, okay? Annual revenue reported at $2.8 billion, fine. But then the PE ratio, it's listed at over 4,000.
4,000. Did I hear that right?
4,462 to be precise. Or sometimes just NA because profitability is so nascent relative to price.
That's not a traditional valuation metric. That's something else entirely.
It's basically a projection of hypergrowth coupled with immense, almost blind faith in future profitability.
Okay, I have to stop you there. Because that valuation just sounds absurdly high. My first reaction, and probably many listeners too, is that this is just FOMO, right? Chasing the latest IPO hype, hoping Klarna's the next PayPal or Square.
Totally understandable reaction.
How is this fundamentally different from, those past tech hype cycles that just cratered once the early investors cashed out? What's the justification?
And that is the critical question you have to ask when assessing this kind of bet.
Yeah.
If they were just burning through cash with no end in sight, yeah, this would be highly questionable. Very risky. But here's where it gets really interesting. Despite that sky-high price relative to current profits, Klarna actually maintains a surprisingly healthy balance sheet.
Okay, tell us about that safety net then.
Well, they're sitting on a massive pile of cash and short-term investments. We're talking $6.7 billion.
$6.7 billion, okay.
And importantly, they have a low debt-to-equity ratio, just 29%.
So not leveraged for the hilt.
Not at all. And analyst checks suggest this huge cash cushion gives Klarna a runway for more than 3 years. Plus, and this is key, their free cash flow is actually positive.
Really? Positive free cash flow already?
Positive and growing. At a huge clip, actually. 53.9% annually, according to the data.
Wow, okay.
So the bet here isn't on some desperate startup burning its last dollars. It seems like ARK is betting on a high volatility growth play, yes, but one that has the financial staying power to weather market storms while it grabs market share.
So high-risk growth, but with a significant financial buffer. That changes the picture a bit.
It does. It makes it a calculated risk rather than just a blind gamble.
Which probably explains why the analyst sentiment is so bullish then. 18 ratings suggesting, what, maybe 40% upside from the current price?
Exactly. It fits that classic high-risk, potential high-reward growth equation, but with maybe a bit more substance underneath than you'd first guess.
Okay, so that's Klarna. High-octane BNPL with a surprising cash cushion. Now let's pivot. The rotation also went into LY Corp. This is a name I'd guess most U.S. investors haven't even heard of.
Very likely unfamiliar to many, yeah. And that signals an explicit pivot towards Asian technology.
A major geographic shift, moving capital completely away from U.S. exchanges for this part of the bet.
Definitely. Notice the ticker, 4689JP. That JP is crucial. It tells you it's listed on the Japanese exchange.
Okay.
LY Corp. It's headquartered in Tokyo, a major Japanese internet services holding company.
So what exactly does LY Corp do? Is it just another e-commerce platform like Shopify?
No, it's much broader. Think ecosystem play, far more integrated than Shopify's model.
Ecosystem? How so?
Well, LY Corp operates in two massive segments. First, media. That includes highly profitable advertising services. Think search link ads, display advertising, that sort of thing.
Okay, ads. What's the second?
Second is commerce. And this is broad. It covers platforms like Yahoo Auction, Yahoo Shopping, ARK Corp, and critically settlement finance-related services. Payments again.
And didn't they combine the Line messaging app and Yahoo Japan? I remember reading something about that merger.
That's right. They brought those two giants together. So this is clearly a positioning for that super app theme that's so dominant in Asia.
Where one app basically does everything for you. Communication, shopping, payments.
Exactly the thesis, it seems. Betting on a consolidation of communication, payments, and commerce, all under one digital roof in a major developed market like Japan.
And the news flow supports this.
Yeah, recent coverage highlights their focus on pushing things like official accounts and mini apps to boost revenue through digital transformation. It really cements that narrative of becoming a potential Japanese super app. They want to integrate every part of the consumer's digital life.
Interesting. So if Klarna represents this sort of high-risk, potentially explosive growth bet, how does LY Corp's valuation look? Is it similarly sky-high?
Actually, no. It provides a really sharp contrast. It suggests a very different investment playbook is being used here.
Okay.
LY Corp is much more established. Market cap around $2.97 trillion, so quite large. Its PE ratio is about 21.13.
Much more grounded than Klarna's 4,000 PE.
Worlds apart. Far more established, seems much more sustainable from a valuation standpoint. But here's the kicker. Its profitability is superb. They boast a very high gross margin, 72.38%.
72% gross margin. That's huge.
It signals a really high margin, probably very sticky business model. and analyst consensus, they also see upside, suggesting maybe a 32.5% rise.
So this isn't really a venture-style bet like KLARNA might appear.
Not in the same way, no. This feels more like a strategic bet on global diversification into an established, high-margin, ecosystem-driven market outside the immediate U.S. focus. Different risk profile, different thesis.
Okay, so let's try and connect this all back to the bigger picture then. The rotation seems very deliberate. Out of one high multiple North American e-commerce leader
Shopify.
and into two fundamentally different high conviction global financial technology plays, KLARNA and LY Corp.
That really is the key synthesis here, I think. The move confirms ARK seems to be prioritizing the long-term growth of, well, digital payments infrastructure and these integrated commerce ecosystems, the super apps, the BNPL leaders, over the pure play merchant platforms like Shopify.
So the core belief driving this seems to be
That the next really big wave of disruptive commerce won't be about building more online storefronts, but about digitizing and controlling the global transaction layer itself, how money moves.
and also clearly signals a geographical diversification, right? Moving away from purely U.S. or North American-centric risk.
Absolutely. It's a deliberate shift. They seem to be actively seeking growth in these high-growth payment verticals like BNPL through KLARNA, and also in these highly integrated, established Asian markets via LY Corp.
But crucially, they aren't necessarily reducing their overall risk appetite, are they?
That's a critical point. No, it doesn't look like de-risking in the traditional sense. They're just changing where they take the risk.
Yeah.
Both Shopify and KLARNA carry high betas, remember? Shopify's was 2.23, KLARNA's 1.72.
Still playing in the high-growth, high-volatility sandbox.
Exactly. They're maintaining that profile, but perhaps exchanging saturation risk in North American e-commerce for execution risk in these competitive global fintech markets. Different sectors, different geography, same high-growth DNA.
Okay, so to wrap this up, Shopify's amazing run is being traded in exchange for what look like strategic, high-conviction positions in the BNPL leader, KLARNA, despite its wild valuation but strong cash position, and the integrated Japanese tech giant LY Corp.
Yeah.
This really does feel like a major portfolio rotation into what ARK believes are the future centers of digital commerce growth.
Yeah.
Shifting the focus.
These moves definitely show a clear conviction, I think. A belief that the next disruptive wave isn't about the storefronts, it's about the pipes, digitizing and controlling that global transaction layer.
So the final thought for our listeners.
The question for you is, how do you view these new fintech plays? You've got KLARNA cash-rich, yes, but with that absurd-looking valuation. And then LY Corp, the high-margin Japanese super app play. Are these truly strategic positions in high-potential global markets? Or is this simply a rotation into the next generation of potentially highly priced growth stocks? Something to think about.
Appreciate you tuning in. Until next time, stay sharp, stay patient, and let the market work for you.